Okay, hello everyone. Good morning, good afternoon, good evening, wherever you may be. So, yeah, first live stream of the year. Clive will be coming on tonight. So the title tonight is Economic, Financial, and Political Chaos, Highly Likely in 2025, and a question about whether it's the collapse of the West, a little bit like we had with the Soviet Union and its satellite countries back in the late 80s, early 90s. You never know. Uh, I think that's highly possible. We're going to look at a lot of stories as to why I think things are kind of crazy. We're going to look at some books as well, which I'm going to recommend, and I have recommended before, but we're getting always uh, new viewers and new subscribers, so it's always good to refresh. So let me say hello to everyone now. So we've got Mark Sneed, Pablo Pina, Whole Bitcoiner, Larry Young from Tennessee, Andrew Arama, Seihan from North Wales, from Bristol, Dilwyn Roberts is here, Darren Smith, Dutch Libertarian, Mark with a K. Can you do an episode of how a Dutch galley slave, Pete Hayne, drove the Spanish Empire to bankruptcy? Well, I don't know about this story, but and I think you've asked before. Yeah, I'll look into it and see whether it's an interesting story or not. I mean, I would say the Spanish Empire was driven into bankruptcy by mismanagement and deficit spending. Maybe this kind of helped it along, but yeah, could have been a trigger. So Rudy is here. There he is. It's been a pretty wet Sunday today. We have been out, but we've gotten wet. It's not that cold. So yeah, the weather's normal, English winter. Way deep inside. I appreciate your content immensely. Thank you. Thank you for the compliment, and you're welcome. Ian Carline from New Zealand, Sybil Faulty from Mansfield, Niels Han Dynasty, Blue Water Stacks. Happy New Year, Mario. Happy New Year to you as well, and to all of you, actually. Happy New Year. It's the first time yeah, live with all of you. And it's good to do these live streams because it gets harder and harder to answer all the questions in the comment section. So we're going to try to answer a lot of your questions too when Clive arrives. He should be here in about 5 minutes or so. Francine Cook, I'm thinking of buying U.S. buffaloes. I have a few 1 ounce gold buffaloes. I bought them when they first came out in like '07, '08. Did you know what the buffalo said to his kid when he left? He said, "Bye, son." I just saw that joke. It's a groaner. Alexander Mills in Norway, Paul Trainer in Liverpool, Alan Link, I always watch you. My mornings aren't complete if I don't. Your content is consistently interesting and thought-provoking. Oh, thank you. Somehow I managed to come up with something. I'm not sure why. This is just the way it is. Josh Reporter says, hi, just got here. Hi, Joshua. Hi, Wayne Robertson. Darren Smith. No, no snow here. Nah, it was too warm to snow. I mean, if you read the papers, it's almost like there's a disaster. The weather, they exaggerate so much everything these days about the weather. Andrew Brown says, "Hi, Mario Rudy. Sorry that I have missed your live stream for a few weeks. Greetings from the Scottish borders. No problem, Andrew." Yeah, thank you, Alexander Mills. Yeah, prosperous new year to Mario and Rudy. Yeah, and the same to all of you. Um, yeah, happy, healthy, and prosperous. MJ DEE484 has he really enjoyed my interview with Andy Scheckman. Yeah, he interviewed me for his channel. He sent me the copy and I put it on my channel. And I noticed he put at Monaco64.com. I'm not sure why they did that. That doesn't exist, that website. I have a Monaco64.net, but I don't really put much stuff there. Most of my content, all my content really is here on YouTube at Monaco64. So ignore that Monaco64.com. That doesn't exist. Vince Kistler, Boca Raton, 70 degrees. Yeah, that's nice. That's nice. And I'm actually gonna be going to Florida next week, not this coming week, but the week after for some days. I'm gonna go meet Andy Scheckman. We're gonna play some golf. It's gonna be warmer there and hopefully do a few videos from Florida. I haven't been to the US in a long time. Looking forward to it. Yeah, Rudy's a bit he's been wet a lot of the today. We went out in the morning, he got wet. We went out this early evening and he got wet, but he's doing great. Melt up sunshine, yeah, I think it's happening already. At least in the stock market, even though there are some analysts like Michael Oliver who looks into momentum, he thinks we've topped and we could see some kind of big correction in the general stock market in the coming weeks. I don't have a gold stater. No, I don't. Oh, here we go. Uh, Clive is coming on. Let's arrange this here. Hi, Clive.
Hello, good evening to you, Mario.
Good evening. How's
Move
Tigger?
the microphone closer. Well, Tigger's giving me good advice on how to not do anything unwise. He's
Okay.
helping me hold on to my gold and silver, especially.
Yeah, that's good. Um, so yeah, I've got a title for I mean, I always have to give a title to the live stream. And it's Economic, Financial, Political Chaos Highly Likely in 2025. And I asked the question of whether we're going to have some kind of uh, collapse or of like the West, a little bit like the Soviet Union and the Eastern European bloc, kind of changed massively in the late 80s, Clive, because I see so many developments there that, yeah, I've never seen before, at least in the West. So just wanted to see what you think about that general idea.
Well, I think we either are in or going into what's called a polycrisis. A polycrisis is where you have multiple crises which are turning up and in some way interacting with each other, perhaps to create a more serious crisis. I mean, we've got the problems in the Balkans, the Middle East, the Sahel region, which is an area of Africa, multiple countries in Africa, and there's quite a lot of things going on. Countries are struggling to get back to the pre-pandemic levels of growth. Central banks are struggling with inflation. We've got potential supply chain disruptions and maybe an energy crisis looming. And then of course, who knows what climate change might do to us? With natural disasters and things. I think there's a kind of feeling that maybe Europe, especially, is becoming less reliant on America, or rather actually being forced to become more autonomous as the previous dominance of America controlling the world and keeping some sort of global peace starts to drift away a bit. What do you think, Mario?
Yeah, and that's despite the fact that America has been able to, in the last 2, 3 years, make Europe dependent on much more expensive energy uh, by blowing up the Nord Stream. I know it's controversial, but I think I don't think the Russians did it. They could have turned off the tap. But like you said, yeah, they could have a reaction to that and try to move away and make alliances with other countries. Even though I saw that Prime Minister of Italy visited Trump in Mar-a-Lago. But the other thing, Clive, that makes me wonder is the political situation in Europe. Like, had this news here from yesterday, Austrian Chancellor quits as coalition fails. So they're going to have some kind of realignment politically, and they think the far right could do well. And you here in the UK, we're having a lot of Elon Musk is getting involved in the politics here. There's a big scandal about the grooming, Muslim grooming scandal from 20 years ago, and Elon Musk is kind of yeah, really trying to how can I say bring it
Stirring
out.
it up?
Yeah, yeah, and I'm not sure, what's going on. And then you have Biden, for example. This seems like an end of empire, last effort to like make themselves look good. Biden awards Hillary Clinton, Soros, the Presidential Medal of Freedom. He gave it to Bono as well. I mean,
Freedom from what?
I know. That's what I was wondering, why did Hillary? I think it's a debasement of that, medal to give it to these people. And then you have Biden trying to ban oil drilling over vast stretch of U.S. Atlantic and Pacific waters. And some people might say, well, Trump will reverse that. But I read this article, and apparently it's really difficult to reverse it. So
Hmm.
and then you have all this net zero here, Clive. They're really pushing this and making life more and more difficult for the average person. So here, net zero flight tax will raise cost of holidays. I mean, it just goes on and on. This what
Well, you've got quite a long list of things, but I can add a few more to your list there,
Yeah,
Mario.
there's a net zero sets to drive up price of petrol cars, or as we call it here in the UK, it's a gasoline car. So what have you got
Hmm.
more, Clive?
Well, you talked about Austria and the UK, but look at Germany and France.
Oh yeah, talk
You
about that.
know, we've got Michel Barnier, the Prime Minister, has resigned. There's going to be deadlock, whatever happens in the French political system. The German coalition is falling to bits, so we don't know who the new government's going to really be there. I think the lack of cohesion in Europe will make it difficult for Europe to negotiate with the United States on these tariffs. So we've got that. And then, of course, the other thing which is going on in the world is the very rapid rise of artificial intelligence, which I think is going to go extremely fast in 2025, and it will be a big disruptor for the labor markets. People are, there's going to be far fewer office type jobs than they used to be, as people find that they can do the same job in at 5 or 10 times the speed thanks to the aid of artificial intelligence. You just won't need as many clerks or pen pushers as we had in the past. Unemployment, I think there is a risk that unemployment will start to rise rapidly towards the end of 2025. We've got the potential for a recession on the, it would come with the higher unemployment. I think people need to be prepared for a world which isn't looking as rosy as it was before the pandemic.
Yeah, and I think there's still some people concerned we've got how many days? 15 days to the inauguration. And yeah, there's still people concerned that the current administration could do a lot of damage still. I saw there's talk that they might even consider bombing Iran before the 20th of January, which would be, I think, not the right thing to do because it's a outgoing administration. So yeah, even the United States, I don't think things are very stable there either, despite the fact that we hear, Clive, a lot about the US exceptionalism, that the stock market now is worth 60% of the MSCI uh, global index. But when I look at the US M1, Clive, and I've compared M1, and I'm going to make a video about this, but just roughly show you here. I saw someone say, like on Instagram a few days ago, it said 80% of all US dollars were created in the last 5 years. And if you go to other countries, M1 or M2, yes, they have gone up, but not as much as the dollar, M1. So, uh, yeah, what do you say about that, Clive?
I've been looking at the figures for M1 and the gold price and that government debt going right back to the 1970s, and these numbers just keep going up and up and up. It's a one-way trip, and of course, with it, you've got the level of consumer price going up, price index going up, house prices going up, labor costs going up. Everything is on the rise, and the reason it's all on the rise is simply that there's more money being created on the planet. Well, it's not money. We know about it. Money for you and I, Mario, is in fact gold. It's not
Yeah.
it's not the fiat, but more and more paper fiat is being created, and that includes the fiat in the form of government debt. So collectively, the governments of the world are getting poorer as they overspend, and the population of the world, at least those who are getting their hands on that newly printed government treasury bills, the borrowings of the government, are getting richer. So there's more money out there. What that means is that the things which are going to be in short supply are destined to rise in price.
Yeah, the other thing, Clive, about the US economy, I'm going to first come up with this chart here. Uh, it's uh, it's the difference, the spread between the US 10-year note yield and the 2-year note yield. And it's usually a positive number. So, and when it goes negative, when the curve inverts, after it disinverts, you can expect a recession, which is the space between the two blue lines. This is like 1990, 91. You can expect a recession right after it disinverts. So as you can see here, and in the latest case, we stayed inverted and more deeply inverted for much longer. But now, Clive, we disinverted, and I think this is screaming that we might have a recession upcoming soon as well. And I just saw this story here over the weekend. This week in credit card news, defaults at highest level in 14 years. And the FT covered it as well. This is in the US. So they've had like the lenders have had to default on like 45 billion because the creditors haven't paid. Uh, they're going to go after them, but that's the highest since 2010. So it seems like the consumer might be keeling over.
There's an awful lot of stories that I've read about the consumers now being unable to make ends meet and having to revert to using credit card debt to continue to pay the bills. I mean, I've heard stories more and more of that in the last few months. So it doesn't surprise me that the level of defaults on credit cards continues to increase. At some point, you wonder, does this impact further down the line? I mean, because the bank, I don't think it's really impacting the banks yet, but of course there comes a point when it would.
Yeah, yeah, that's right. Um, I was listening to this guy. His name is Richard Whalen, and he's a bank analyst. He used to work for the New York Fed, and I was surprised. He said he still speaks to people at the Fed, and he said I think the Treasury and the Fed should start remonetize gold, and the U.S. Treasury should mint gold coins for the public. And he said, but we shouldn't use it with a monetary value. We should, and also silver, he said, we should use it by weight. And I kind of agree with him because if you put a dollar value to it, people can always manipulate it. But if you put it by grams, let's say you've got a 10-gram gold coin or a 30-gram silver coin, you will people will quickly work out the ratio how much they can buy with those. So I thought that was encouraging. He's an older guy, and I thought he'd say, "Oh, there's no room for gold and silver," but he actually thinks it's a good idea. But I know there's a lot of people who are saying that maybe they're trying to bring the economy down so that they can and the system down so they can institute. Yeah, CBDC, universal basic income, because 95% of the people are gonna not be prepared for it. My hope is that they lose control, and but then it would be a mess as well. What's your view, Clive? Or are things just gonna go along, as they have? Or am I being too
Well,
like pessimistic?
the almost every currency, paper currency that is, which ever came into existence, has gone out of existence. So the few hundred currencies which are still running today, for the most part, have a very short lifespan in the scale of human use of money. I think we're in the end game now when it comes to the Western currencies. We went through several phases. We first of all came off the gold standard to some extent in the 1944 after the Bretton Woods Agreement, when it was effectively a dollar standard. That allowed the American government to print huge amounts of money exporting it, which it wasn't backed by gold, because the American citizens were not able to cash in their dollar bills into gold. That couldn't happen. And then as we got into the late 1960s, or about 1968 onwards, countries around the world were starting to say, can we have our gold back? And there came the point in 1971 where, it was pretty, well, it was already very obvious to most people that the Americans didn't have enough gold to pay everybody. So they closed the gold window in 1971. And since then, we've been on a literally, not only in America, but every country was off the gold standard by then. And we've literally been on a printing spree where debt of governments has gone up and up at a faster rate than ever that was possible under the gold standard. And we're also seeing the money supply rise, the central bank balance sheets rise. Um, it seems to be rising at a fairly constant rate, but according to the forecasts, and I'm talking past tense, fairly constant rate, according to the forecasts, and these are the government's own forecasts, the level of debt is set to rise compared to the economy at a faster pace than the economy going forwards. And, it's like your credit card debt. There comes a point, if your credit card debt is rising faster than your salary, there comes a point where you get to the situation where you can't pay the bills anymore. And, one of the big things which is biting governments at the moment is the fact they've got debt which is coming to maturity, which they borrowed the money 5 or 10 or 15 years ago at very low rates of interest. In many countries, European countries, the rate of interest was zero, or was negative, in fact. And in the United States, it was effectively zero. They're having to renew that debt at rates of several percent higher than previously. So not only that they're having to renew the old debt, but we've got all this budget deficits, which is new debt they have to borrow as well, and that means that the although the debt is rising by a fairly steady pace, 6-7%, the interest cost on that debt is rising by tens, 20s, 30% a year due to the maturing debt and the higher interest rates. So it's going to cost governments a lot of money, and they're going to struggle to pay the interest over time. Or maybe they'll have less and less money to spend on other things. But I think what they'll do is just print the difference.
Yeah. So in 1971, August 15th, Richard Nixon technically he suspended Clive the convertibility of the dollar into gold. So it was temporary, he said. So we're actually technically we're still on that standard, and I think the statutory price of gold is $42.22. But of course, that's just a joke. But yeah, like you said, after 1971, as you can see here, this is the national debt. It just starts to take off. And it's really taken off, I would say, since the '08 crisis. It's going like st the rate of increase is increased, and then after 2020 as well. And I have a feeling that on the next crisis, this is going to go up even more steeply. And I think the thing to watch for the Fed this year is not really too much the rate cuts, the short-term Fed funds rate cuts, but what they're going to do to their balance sheet. I think they could start printing again. That's the feeling I get. Is that the same thing you're thinking along these lines?
Yeah, I mean, I think the consensus is they'll start printing in the first or second quarter. I'm a bit more cautious on that. I think it'll be the third quarter, by estimate, and the way that will come about will be due to the rising rate of interest, or rather the rising yield on the 10-year bond or the 30-year bond. It doesn't really matter. What we're seeing, although short-term interest rates are falling, the yields on longer dated government bonds, like 10-year bonds, are rising. So we've had a 1% fall in US short-term rates. They cut the prime rate. But at the same time, the interest rate or the yield on the 10-year has gone up by 1%. And the reason for that is basically the need of the government to keep funding itself at an ever increasing rate. That's not going to go away. Obviously, we're in a debt ceiling freeze at the moment, but it'll once they raise the debt ceiling, the government will have a rush to raise money, and it's quite possible investors will have indigestion at current levels of interest. So that would be that to borrow that money, they'll have to borrow at higher rates. There is a point beyond which the government doesn't want to go. I don't know whether it's 5% or 5.25% or 5.5% or maybe 6%, but the higher that rate goes, the more unmanageable it becomes. So at that point, the Federal Reserve will be invited, enticed, ordered, say what you like. Obviously, they're not under the orders of the government officially, but they do as they're told, in my opinion. They'll be enticed or invited or incentivized to buy some of that government debt. Obviously, buying it indirectly, it goes through broker dealers first, but they'll be buying some of that debt, expanding their balance sheet. How do they expand their balance sheet? Well, where do they get the money to buy the debt? Well, they run the printing presses, they print the money, effectively buy the debt, and that money flows to the hands of the government, which can then spend it on wars, social programs, government salaries, whatever it likes. So that's basically how the government or how the central bank balance sheet expands. And of course, the balance sheet of the central banks is much, much larger than it was a few years ago, and it's likely to continue expanding.
Yeah, I saw this tweet here, Clive, and this, I mean, shows who's benefiting really from this money printing, fiat currency exercise, and uh, you can read all about it on in this book. It's Fiat Money Inflation in France. It happened in the 1790s, revolutionary France. But yeah, this is the share on top here. Share of checkable deposits in currency held by the top 1% uh, wealth holders, the richest. So it's gone from just below 17.5% to now almost 32, well, 31, 30%. But this is what is more shocking here. Share of checkable deposits in currency held by bottom 50%. That's gone from used to be like above 12 before the financial crisis, and we're now down to below 6. And I think it's one of the reasons why we're seeing those credit card defaults because that's mostly the bottom third of the American people who have no money, no money saved.
Yeah,
Uh,
so if I'm a bit of a cynic, if the currency goes to zero,
yeah,
those haven't got any have got nothing to lose in a certain sense.
that's right.
Uh,
Right.
and it'll be the rich who've got the that how much is it, 32%
Mm,
of these deposits. They're the ones who will suffer at
yeah.
least in financial terms. Not obviously they won't suffer because they have other assets, unlike the poor who won't.
Yeah. But I think there will be some that are think they're very rich and they have a lot of paper assets. They're going to be, I mean, they're going to be destroyed financially. And if you look at Trump over the last, well, in his career, and especially in the last 10, 15 years, he's added on a lot of these real assets like golf courses, buildings. And does he know something? And the Secretary Treasury to be, his biggest position is gold. So I don't know. You could be right. I mean, it would be the biggest, probably the biggest wealth transfer. But is it really wealth, Clive? If it's all based on fiat currency, a lot of that, those bank and checkable deposits.
If there's something you want to own, like a golf course, uh, for example, I would say, and you can afford it. If you can afford it now, I'd say buy it now because you might not be able to afford it in 10 years' time. There'll be more people with more money who will be able to afford it, and you have a lot more competition. I mean, I just this last Saturday, 2 days ago, yesterday, in fact, I was buying more silver. I went to the local silver shop there's a pawn shop, and they'd taken silver, and a deceased estate had brought in a bundle of coins, and I got a bunch of different coins. I got where are they? Yeah, I got a bundle of buffaloes.
Oh, you bought the is that the silver buffaloes or
Yeah, the silver buffaloes. I got the gold. I got there's two types I got here. One's called United States of America buffalo, and the other one's called the Golden State buffalo. I don't know if that's the official name. So I got a bundle of those. I got some of the Australian kangaroos, the UK Britannias. You'll be familiar with those. Um, and oh yes, the Americans will know this one. The American Eagle, $1 Eagle.
yeah,
Right.
I have some of those. And yeah, I still think that having a physical gold and silver and the price, yeah, it's interesting to look at where the price is. We look at it every morning when I go through the prices, but I think the way to look at gold and silver is how much weight you have. And if you can keep increasing your weight, I think you're doing well. And talking about that, Clive, I wanted to. I'm just typing here in the chat. It's there's an app, and right now it's only on the Apple iPhones. It's not on Android, and it's called Ounces. And I know the guy or the person who produced this app. And at first, he didn't have Swiss francs. And I said to him, can you put Swiss francs in? Because I think Clive would like it. So for all of you here, if you download this app and it's free, you can put the amount of silver, gold, platinum, palladium that you have, and it updates it every second in terms of fiat, but you put the amount of ounces you have, and I think it's interesting to keep track of that. So
Is it telling you the price in the various
yeah,
currencies?
yeah, you can change all the currencies. I'm gonna have
And
a
how about telling you per gram?
let me see. Let me just turn the turn my I put my phone on airplane.
I mean, the reason I ask is every time I go to buy silver, unless it's 1 ounce coins, but if it's bars or anything, the
Yeah.
dealer always pops them onto the
Oh
scales and
yeah, you
says,
can
"Oh,
put it
it's
into
so many
grams,
grams."
ounces and grams. So yeah, I didn't realize that. So you can put in grams, uh,
Yep.
and you can put the different currencies, and it gives you the total market value of all your holdings. So
Oh, cool.
yeah, I think so for all the viewers as well, I recommend this app. It's really good. And yeah, every time you buy a little bit, you can just update it really easily. Or if you have to liquidate some for an emergency, you just subtract it. So should
I wanted to show you another one which I bought, which was very special. It's an Australian coin. You probably can't see it very close, but you can see there's a picture of a ship here,
okay.
and it's a ship it's triangular, a very triangular coin. It's 1 ounce exactly. It's I think it's $1 coin, but the ship sank in something like 1600s, laden with treasure, and I think they're still looking for it today. It was somewhere around Australia.
All right.
So if there's any treasure hunters and they want to go to Australia and look for the ship laden with gold and silver, which went down, yeah, it's still there. I think it's still there.
I'm just typing the Andrew Watson's asking what's the app called again. I've just put it on the chat there. Ounces. That's it. Ounces with an S. Yeah, really, really good app. Should we let's see. There's two books here, Clive, that I read them like over 20 years ago. The first one was this one here, which this was like a really bad time for France from like the French Revolution until Napoleon took over in 1796. So the reason they had problems, I guess you have to go back to the Mississippi bubble in 1720, and France went bust, and they never recovered, and they had the wars like French and Indian wars and that, and the economy wasn't doing well. So they tried to print money with the assignats. And politically, of course, they chopped the king's and the queen's head. They confiscated church land and aristocracy. It was mayhem politically, and um, and then you have this one here. Uh, in Germany after World War One, and every time it's the same thing. A lot of that they lost the war, and then the Kaiser had to abdicate, and then the currency collapses. And I mean, the currency part, I've always told people that when Ben Bernanke made that speech in 2002 about helicopter money, I said that was a big signal to me. But in the last 20 years, I've been waiting for the other symptoms. And I think if people want to know what's going on today, they need to read this because I think the symptoms are getting so crazy like those.
You know, after the war in Germany, the reason the German currency collapsed, it was all to do with the fact they had to pay these reparations, and they couldn't pay them. So to try and solve the problem, the Germans resorted to printing the money that they were going to pay in reparations. And of course, the foreign nations weren't very happy with that. They were trying to cash the money in, and of course, the value of the currency effectively collapsed to zero.
Yeah.
But the one which makes me laugh the most is the French one, which you were showing with the Assinger. The person who brought the French economy into chaos was not a Frenchman, but a Scotsman called John Law.
Yeah, in 1720, that
I
was,
think he was I think he was wanted for murder in
yeah,
Scotland, so he
yeah,
escaped to France and somehow got himself a very senior position in the whatever became the French financial system. I think he became the head of the central bank, or
yeah.
whatever it would have been
Well,
then.
he founded, I think, the Banque Royale, which is the central bank. And then in the 1790s, during the revolution, they brought in a banker from Geneva called a Necker. And he
Yeah, we have some statues here in Geneva to Mr. Necker.
Yeah, so anyway, I think those two books are good. Someone said nobody reads though. Well, I think people still read. I read that the bookstores here in the UK are doing well again because people are buying more books. So I'm not too sure about that. Anyway, should we take some questions, Clive?
Yeah, good idea.
So if the viewers,
Uh, Here's what I see my name on it straight away.
yeah.
I haven't read the question. It says, just been looking at Clive's 40 stock picks.
Oh.
Embarrassingly, I'm unfamiliar with many of these companies. Very good diversification of sector, though. So perhaps this is not about gold, silver, but just a couple of words on that. Very important when you are choosing stocks to be diversified by country, diversified by industry, diversified by style. That means you have high growth companies, you have more stable companies which are more solid, and you don't want to have everything riding on the same investment style. So when I put this portfolio, and anyone who wants to see the portfolio, it's on my LinkedIn. You can just scroll back through my recent posts and you'll find it. It's an extremely diversified portfolio. It's got investments from all around the world. It's only got about 30% in the United States. The rest is somewhere else. And my aim is to do what I did last year, which is to, with this portfolio, to beat the benchmark. We'll see if we succeed again this year.
David stops. Do you invest in dividend stocks at all? I'll answer first, Clive. So, I mean, I have gold and silver miners, producers, juniors. I'm not as diversified as Clive, but it's a small part of what I own. I still think it's really important to be outside the system. That's why I hold gold and silver physical. But dividends, yeah, I mean, I have some of the miners like Newmont and Barrick and like I think B2B I forgot the other one, Gold Stock. They're
B2 Gold.
B2 Gold. They have a pretty big dividend yield. But yeah. So, Clive, do you think is it important for you to get dividends, or you go for growth, or both, or?
Um, the portfolio I put up on LinkedIn, the 40 stock portfolio, has a yield of about 2.3%, and it'll be about 2.8% next year. So a decent increase in yield. If you're investing for dividends, and when you're retired, I'm a retired person, you have to eat something. So dividends are part of my income. And so, yes, I do invest for dividends, but that does not mean investing only for the highest dividend you can find. A high dividend typically means it's a very mature company. It's probably got little or no growth left. It might be going backwards. So I think it's important to get a level of dividends where you can see that dividend growing over time by at least what you expect the rate of inflation or what your rate of inflation will be, because we know the rate of inflation is massaged a little bit too low here. Um, so if you look at the portfolio I put up on LinkedIn, at least according to the forecast, the dividends are going to grow at a much faster pace than the CPI. I think at the level it's maybe 12 or 15% growth next year is expected from those dividends. Um, but you don't have to invest exclusively in dividend paying companies. You just need some sort of income and you need that income to grow as you grow older. So yes. By the way, you're talking about gold companies. In December, I received a dividend on GDXJ. That's the gold miners ETF for junior companies, and it actually surprised me how massive the dividend was. I can't tell you the percentage, but I looked at my bank balance and I thought, wow, that's a good one to own. I was really pleased with my dividend on the GDXJ.
I,
It came in December. December was a great month to get a dividend because there's not many companies pay their dividends in December.
Yeah, I got from Barrick and Newmont in December. Pablo Pina is asking a question here, and I've got an article that I want to bring up. He said, "What can we see if Trump goes full gung-ho tariff?" Well, I'll show you, Pablo, because there's a story that I was going to share here, and it's this one here from the FT. She has a plan for retaliating against Trump's gamesmanship China is marshaling its forces for long-term competition against America that it believes is divided and in decline. So I think the Chinese are working on it already. They're not going to be uh, bullied around. Am I pro-Chinese? No, I'm just observing things. And one thing I read that's interesting here, Clive, is that Trump had invited Xi Jinping for the inauguration, but look at this sentence here. Beijing, in effect, rejected Trump's invitation for Xi to attend the inauguration. So it looks like I think it could be very disruptive, actually, these tariff wars. It was disruptive. The Smoot-Hawley Act in the 30s that really pushed the world into deeper and deeper Great Depression. I'm not saying that's going to happen, but that's what I think could happen, and we could see a lot of the Chinese trying to diversify even more from doing business with the U.S.
Economically, tariffs are a bad thing for the world as a whole because if you have no tariffs, resources will move to the places where they can be most efficient. So, if the Canadians are most efficient at managing socks and the Americans are most efficient at manufacturing shoes, you'll have all the manufacturers in Canada and all the shoe manufacturers in America, where each side is the most efficient. But if you impose tariffs, then you're forcing the Americans to become shoe manufacturers and sock manufacturers, and the Canadians to be shoe manufacturers and sock manufacturers. And so each side now has part of their business which is less efficient than it would otherwise be. And so it doesn't matter whether we're talking America, China, or America, Canada, or America, Europe, or between any two countries. It's not terribly good for the world economy. But I can see why any country might want to have tariffs internally to protect its own industry. The idea of imposing a tariff on Chinese cars, electric cars. And I'm not sure how many people in America actually bought electric cars from China. Maybe it wasn't that many anyway. But the idea of putting this tariff on is not so much about raising revenue for the American government, but it's more about protecting the American industry itself, expecting if Americans are going to buy, well, let's say it's more about discouraging Americans from buying Chinese cars that they weren't buying in the first place.
Yeah, Joe Biden is on the chat, Clive, and he's asking, how do I get around capital gains tax? Well, if you live in Switzerland like Clive does, you don't have to worry about it because there ain't any. But I'm not sure you can get around it in the US. Here in the UK, you can get around it by having an ISA, but that only limits you to investing £20,000 each year. But everything is like capital gains tax free here in the UK as well. If you buy gold and silver coins of the realm, their capital gains tax free as well. Have you got any idea how to get around capital gains tax in the US? I'm not sure if Joe Biden is based in the US.
Well, the Americans have got their huge panoply of retirement funds, and I don't know which ones are tax free, but some of them certainly will be, whether it's the Roth IRA or I don't know the names of them. There's quite a few of them around. So, but in the UK, there's a couple of other things which might be available depending on your situation. The first thing to look at is where you were born and also what your domicile is, because if you do have a valid claim that you are a UK resident, not domiciled, there can be ways to avoid capital gains tax on your non-UK assets. And the other thing which is available to every person in the UK, rich or poor, is if your assets in some way, shape, or form are wrapped up inside an insurance policy, and by that, for the man in the street, that just basically means some sort of insurance savings scheme. You're not paying capital gains as you go along anyway.
I see, I see. Um, and I think maybe in the US, you have to get a good accountant, and you might be able to deduct your capital gains against other things like interest payments and stuff like that. I mean, the very wealthy get away with it. and it does cost money though to get an accountant. Blue Water Stacks, thank you for the super chat. There's discussions globally about the Treasury market breaking opinions. Yeah, and I think not Sergio Garcia, Carlos Garcia said maybe blaming the Chinese hacking the Treasury, the machines won't stop printing fiat. Low, low. Yeah,
Mhm.
I think I've spoken about that, Clive, that the primary dealers, they're worried that there's so much issuance coming in the next decade that it could break the Treasury market. So I think we spoke about
I
that.
wonder if I wonder if he's talking about the volume here being too big for the primary deals to handle, or
Yes.
whether he's talking about the treasury market breaking because the yields are actually moving higher
Yeah.
in the United States and in Europe. The yields on the various country treasuries are diverging, meaning that people are starting to say, is there some sort of move towards a breakup of the euro?
Yeah. Well, that too, and the other thing, I think the yields going up is like a symptom of a lot of paper coming to the market, and if there's not going to be as many buyers, like let's say China and other countries that are trying to diversify, the only way to attract investors is to let rates go higher. But yeah, so there you go. Uh, Someone's asking, are Scandinavian countries better to be than the UK financially? I don't think any of the countries in Europe are very in good shape financially. I don't really follow the Scandinavian countries too much, but I don't think it's any better. What do you say, Clive?
Well, I heard the Poles are now moving back to Poland. So that might be a good place to go. You know,
Yeah,
you may remember a decade ago or 2 decades ago, the old joke was that everybody in Poland was moving to the UK to become plumbers and
yeah,
electricians and
yeah.
so on. But you know, it may be anecdotal evidence, but Poland is said to be in fairly sound shape these days.
Yeah, it's supposed to be the next economic powerhouse in Europe, especially with what's happening to Germany. But yeah, the
Yep.
Scandinavian countries, I think they're in the same boat as we are. Uh, 903 Boater, who are you going to sell when it hits the fan? Your local coin dealer won't have that much money. It will be like a bank run. I guess he's talking about gold. No, I think, yeah, maybe the local coin dealer, a small coin dealer, no, but the bullion dealers will be around because, just like you might be selling like $100,000 worth of gold, someone might want to be buying too. So a reputable uh, dealer that has been dealing for a long time will always be there. There might be a day or two when things go haywire that they close shop when it's so volatile they won't make a market. But the point about having gold and silver when this crisis comes is not about selling it because it's like uh, it's like in Venezuela, Clive. I think in 2017, 2018 gold took off. And if you had sold your gold in Venezuela to take profits, a year later, that Venezuelan currency you're holding was worthless. So I think it's going to be the same for us in the West. So I'm not too concerned about selling my gold to a dealer. You just have, I think people will accept gold and silver by weight and they'll say, I can't afford this car anymore. I say, well, I'll give you a sovereign for your car, and they'll take it. That's what I see.
You know, I think it's all a question of how much you've got. You know, if you have some coins at home, and when the time comes to sell them, because you need the money, you're selling because you need the money, not because you've made a profit. You know, I think it won't be a problem to find dealers and others who will take coins, you know, one at a time or two at a time or something like that. But you know, if you're trying to sell a large quantity in one go, you're inevitably going to run into all sorts of KYC, know your client, and due diligence, and potential, worse than that, they won't take won't take it because they don't know where your gold coins have been, what they've done. So if you've got hundreds of thousands, I think you've really got too much at home. So I guess my advice would be no problem if you have a few coins and they're nice to look at and you show your friends and you can if the shit hits the fan. I'm sorry, I shouldn't have said that word. But
I'll forgive you.
if the worst comes to the worst, you'll be able to go down to the shops and buy things quite easily. I think with your silver coins, and you'll be able to exchange your gold coins with others for more valuable items. But probably in fairly limited quantities. But if you have a large quantity, then although we all know it's not yours unless you physically got it in your possession, there comes a point beyond which you have no choice. You have to put it in custody. Whether that custody is having a bank buy it for you and hold it in your safe custody account, or whether you're using one of these ETFs, exchange traded funds, which hold physical gold. And they're available in every country. And you've got exchange traded funds which hold physical silver. Beyond a certain point, it's the most practical way to go because you don't want to be having hundreds of thousands of pounds of coins at your house. And if you want to have cash it in one go, it's going to be very difficult to do that because of the money laundering regulations.
Yeah, and I think that question was more also to when everything unravels. So, as I said, I don't think you'll be wanting to exchange it for the collapsing currencies. But yes, if it goes up, like Clive said, you might. I don't think you have a problem selling it. The dealers will still be around. And as for storing, I mean, I understand that Clive trusts a bit more the banks because he's in Switzerland. I think they're a bit more trustworthy with the gold. But here in the UK, I would say uh, private vaults. I don't think the banks. I don't think you should trust the banks here. Like for example, Gold Investments, who's one of my affiliates, they will help you with that if you're interested. And all their details are below in the description. And in the US as well, I'm affiliated with Miles Franklin, and they'll store it for you too. But I think it's good to have a mix. Have some in your possession, some. Yeah, it's up to you to decide.
What
Um,
one of your viewers, Mario, wrote to me last week and said that he'd tried to send £100,000 or something like that to a UK coin dealer to buy gold. And according to him, his bank literally refused point blank to send the money electronically. This is electronic, not cash. They refused to send it to him and wouldn't give him a reason. He didn't say the name of the bank, but you and I can probably guess it could have been any of the big names.
yeah, they shouldn't really. I mean, they should have gone through the security check with him. But yeah, I don't think that's right. Anyway, there's a super chat here from Twin June. Thank you. Hi, Mara and Clive. Last weekend, Mara said there was a writer during the Middle Ages who wrote that the kings and queens do not own the coins of the realm. Do you recall the writer? Yeah, let me check. I have to search. Um, he was like a, let me see, coins owned by Prince. Writer. I forgot the guy's name. He was a monk. Most of the
Yeah,
most of the people writing back then were, yeah. It was like in the
I didn't know that
12,
one.
1300s. I don't know. Coins on.
Yeah,
Uh,
that one I can't help you with, Mario.
yeah, I'm trying to find on Google. Late medieval coinage. Yeah, he was a French monk, a French guy who wrote about it. Um, oh, hold on. Um, I might make a video about it because I have a book here from the Bundesbank about gold, and they talk about that. So I might do a video about that another time. It's the principle, Clive, that prior to this guy writing this, like in the 1200s, 1300s. a lot of kings or princes thought that if they minted the coin, it was theirs. But this guy wrote and said this is not right because uh, whoever you pay the coin to has given you something in exchange. So by taking their coins, you're like stealing. So because some people think that they can come and confiscate your coins, but in the States, really, like FDR, Executive Order 6102, they didn't really confiscate. They asked you to hand it in. Of course, they said if you didn't, you'd be liable to a $10,000 fine. But what do you think? I'm not a lawyer,
Uh,
but
well, the coins of the realm do not belong to the kings or queens, never have done. They bear the effigy of the king or queen to show that they are officially authorized coins of the realm,
yeah,
not belonging to the realm.
and also it's a way of making sure because I know nowadays it doesn't work that much anymore because we can't really trust too much the government. But the the thing was that yeah, government would issue coins that were real gold and the same fineness, same standard, and that they put their stamp on it, and that's why it worked. Of course, there were private mints that do just as good a job. So there you
You
go.
know, in 1933, after Roosevelt ordered everybody to exchange their gold coins for paper Federal
Mm.
Reserve notes, there were, of course, lots of people who said, I'm not doing it. Well, they didn't say it publicly, but they didn't do it. They kept more than they should have done at home. And then over the years, as they needed money, don't forget, after a year later, they put the price of gold up from $20.67 to $35. So that was like a nearly 70% profit. So what people tended to do after that, they owned these coins illegally, but if they had a friendly jeweler nearby who they trusted, they could take their gold coin into the jeweler and say, "Will you?" It's a $20 coin. Don't forget. Will you give me more than $20 for it? Of course, the jeweler would be delighted to do it because that coin would have been worth $35. Now, of course, the jeweler couldn't cash a $20 coin in for $35, but what they would do illegally, of course, would be to pop the coin into the melting pot, mix it up with some impure gold jewelry, and take the resulting gold bar along to the US Mint, where they'd be paid the equivalent of $35 an ounce. In other
Yeah,
words, a nice big profit for the person who's turning in the coin illegally, of course, a nice big profit for the jeweler who was melting it down illegally, of course.
yeah. All right. Let's see if there's some more questions. Uh, yeah, ask questions, guys. I might have missed some of your questions, so if you want to ask again. Rockefeller built a massive safe under the mansion. Uh, thank you, Clive. You have to fly under the radar.
Good point.
The nursing,
Um,
the nursing home will get it all.
Yeah, I thought that's quite a very clever comment. I mean, this is one of the things where the cost of looking after you in your old age is going to be rising faster than the official rate of inflation. And I've said this before, and most of your listeners will know this. The CPI, Consumer Price Index, is an index which is fudged. It's not really telling you the true rate of inflation. And also, it's telling you the rate of inflation of price increase of those things which are mass produced. It's not telling you the rate of price increase of the kinds of things that you're going to want to own when you retire. So as you get when you're young, you're consuming mass produced things, Netflix, frozen pizzas, cars, those sort of things. But at a certain point in life, if you've done well, you want to own a nice home. The price will be going up. You probably want to own some nice paintings on your wall, like the ones I have on behind me. I can tell you, I bought these probably 10 years ago. I couldn't buy these for anything even remotely close to the price I paid for them. I was probably 150, 350, even $650 a painting, I doubt that the paintings of that size would be anything below 1,000 these days. Um, and of course, one of the things which is, and the nursing home bit, nursing homes are going to cost a lot more because the
Dude,
number of people to look after you is not going to go up, but the amount of money on this planet is going to go up by a lot compared with the number of people to look at. And also, we have more people wanting to be in nursing homes as the population ages.
well, the other thing about nursing homes is just like running a hotel, and all the costs are going up: electricity, heating, water, everything. John Knox, I'm having all sorts of issues with UK banks and stockbrokers. Trading 212 is the latest to unlawfully block me from accessing my accounts. I'm unable to close positions or do vital account functions. Yeah, I mean that's always a problem and I do have an account. I have an account with IG, and I mean, that's why I favor having things outside the system. And I am aware of the risk of having money with brokers and banks. So you need to, like Clive says, don't put all your eggs in one basket. Look at Clive. He's got all those paintings there, a few thousand francs of paintings, probably even more now. So that's all I can say. But I'm not sure. Have you asked them and called them? They shouldn't really block your account. Um,
One of the problems which I get asked often, what do you think of this firm? What do you think of that firm? And most of these firms I never heard of. Uh, one of the things you've got to be very careful about is dealing with firms where you've got no human beings you can call. If the only way to contact them is to fill in a form, like a customer complaint form or a I've got a
Online.
problem form, yeah, then they may not have the staff to deal with your problem. And if there's no easy way of getting hold of a human being, you're probably in the wrong company.
Yeah. Someone's asking here, what tips do you have to investors in their 20s? Well, I'll go
Great. Oh,
live.
yes, love that one.
Yeah, I mean, when I was in my 20s, yeah, I think I got a pension, a private pension here in the UK, and I'm not sure that's the right thing anymore. I would be trying to buy a little bit of sovereigns in every month, but also if you have debt, if you have a mortgage, try to pay that off first. What else? Make sure you have a budget so you know what is coming in every month and what's going out, and make sure it never goes red. And then you can start thinking about investing. And yeah, what about you, Clive?
Well, of course, the greatest investment a young person can make is in his brain.
Yeah.
Learn a skill set of some kind and become a specialist in something. You can still be a jack of all trades, but be really good at something, and that way you'll always have people who are demanding the best in that area. So I think education or knowledge or a manual skill doesn't matter, but if you're good at something, you already have uh, something which is going to deliver you an income for the rest of your life. And that's very important. But I'm going to say something which might sound a little bit outrageous to your listeners here. What would I do if I had my time again? And I think if you're 18 or 20
Yeah.
and you're making an investment, you want to put 100% of your money, 100% into the thing which you think is going to do the absolute best. Why? Because you've got another 45 years of work ahead of you. So if you lose it, you've got 45 more chances to make it back. When you're 20, you probably want to have not 100% in one thing. You probably want to have two or three investments. When you're 25, you probably want to have six or seven or eight. And by the time you're 30, you probably want to have 15 to 20 investments. And by the time you reach my age, you want to be very diversified so no one investment can destroy your retirement. So you probably want to be extremely diversified with maybe, if you've been working 45 years, perhaps 45 investments.
Yeah.
But young people, I think if I didn't do this when I was young, but if I could have my time again, you've got to find something which you think will do extremely well and bet what you got on it. Of course, I'm assuming you're not already rich. You've got just the whole principle of work hard, earn more than you spend, or spend less than you earn, gives you something left over. I'm talking about investing
Yeah.
that bit and go for it.
The other thing I would say is have discipline. Yeah, have discipline and perseverance and yeah, just keep going. Because and also yeah, because if you're working, usually when you're young, you start working for a firm, you need to be serious because if you don't, it won't last there too long. Someone's asking here, Jean-Louis Lalonde, have you ever heard of Pierre Yovanovitch? Oh yes, I've been following him for years. He used to be on RT a lot of times with Max Kaiser, and I've got some of his books in French. He totally distrusts fiat currency, banks and governments, and I actually follow him on X, and he follows me too, Pierre Yovanovitch, and he's written some interesting books about economics. So.
Someone's putting a bit of a joke here after my last comment about going all in. He says, throw it all on fart coin and see what
Oh,
happens.
it's funny because I was thinking I was going to say that as well. Fart coin. Yeah.
I didn't mean that. When I said an investment, I meant an
Yeah.
investment that could be, if you think gold is the greatest thing, that could be gold, but you might have some other ideas.
Um,
But I do mean an investment, not a speculation.
yeah, I've got some of Pierre's books here, but I don't know where it is. But he's interesting. Uh,
There's another question I get asked all the time by your viewers, and it comes in several times a week. It goes along the following lines. Hi, Clive. How can I get a? I'm really interested in finance and banking. How can I get a job in finance? Well, it's a difficult question to answer because we've got this AI coming in and taking away all these jobs. So the number of people working in finance is going to go down. And I can tell you factually from having been in the industry that the large, reputable, the kinds of banks I always work for, the best top names, whether it's a small private bank or a large, well-known retail bank, they get hundreds of applications a month, maybe thousands. I can tell you factually, it's almost impossible for the HR department to look at all these applications. So many of them will just go into a pile and then after 3 months be effectively binned, or they'll these days probably it'll go through some automatic AI program which will write a letter saying thank you for your application. We'll keep it on file in case something comes up. There's not a lot of point applying for jobs which you haven't seen advertised or which you don't know are vacant. And if you are applying for something which is vacant, it's not good enough just to have the qualifications which they're listing, because there'll be plenty of candidates with those qualifications. You need to have something else, which you did earlier. Maybe, when I was a teenager, I taught children mathematics, or I've learned to harness the power of AI, and this is what I've done with it. Or I'm really good at Excel spreadsheets. It doesn't matter what you're good at, but you've got to have something which goes beyond your university degree, goes beyond a qualification. It's got to be a little bit extra so you stand out from all the other candidates. And the other thing I'd say is if you're applying for a job in the finance industry, don't apply willy-nilly for everything. It's much better to apply for one and then spend a week tailoring your curriculum vitae specifically to get that job rather than sending the same CV out to 10 advertisements and hoping that'll get through. You've got to really make sure your CV is tailored to the job which is being advertised to give yourself a chance.
I mean, maybe it doesn't happen as much anymore, Clive, but also networking with people like friends. If you play a sport like golf, it's a very social sport. You can always meet people and talk to them. But the other thing, it's a little bit more contrarian, Clive. If you keep stacking gold, you might end up becoming a bank because of the way things are going right now. So that could be a way of getting into finance. And I'm not joking, I'm being serious.
Yeah.
But
Yeah, I mean, I think you have to start building wealth when you are very young, and if you don't know what to do, because there's a lot of choices out there, gold is a very good choice. I mean, I can tell you at the age of 18, was the age I actually physically bought my first gold coin. And I don't think there's been a year since then when I haven't bought one
Well,
or more.
I didn't start as early as you, Clive. And Durarama, Mario, Clive, with inflation on the horizon, what will trigger it the most, such as freezing the convertibility from the 70s? Well, it's already, I mean, what will trigger the most is all the rate cuts that we're seeing, and also when the central banks have to start printing reserves to buy government bonds. I mean, they're not going to allow deflation to happen because deflation will kill the system.
I mean, the biggest causes of inflation are the human labor cost. So rising when you have rising salaries, it's feeding into the cost of everything. The supply chain also is affected by things like energy costs. So I don't know if people have noticed, but the I've noticed the price of oil has been rising quite sharply in the last few days. It was sort of $68 a barrel now. I think I saw yesterday it was, or the day before, it was $74 a barrel. In fact, it just came up on my screen as I spoke. There's $74 a barrel now on the near future. So energy costs could be a component which is causing inflation to return.
Mm. Yeah, but I think, Clive, I look at these prices more as a consequence of inflation. I just think inflation is too much money chasing too few goods. But
Yeah,
yeah,
you're right. It is. And at the end of the day, that's exactly what it is.
yeah.
But it doesn't necessarily always turn up in the same place. Sometimes
Uh,
it's
yeah,
turning up in higher wages,
yeah,
sometimes it's
yeah.
turning up in something else.
I see cocoa prices are going through the roof and coffee prices too. So,
Yeah, I've noticed something special there. Go and buy a bar of chocolate. Try and buy one, which is pure chocolate now. They don't have too many on the shelves anymore. They're all chocolate with nuts or raisins
yeah,
or wafers or biscuits inside. And the reason the chocolate manufacturers are trying to push that now is because the price of coffee's gone up so much, so they're trying to reduce the amount of coffee beans or cocoa beans it is,
yeah.
which goes into the chocolate and offer you something else like nuts instead.
Yeah, and I saw that even Toblerone, famous Swiss chocolate, is not Swiss anymore. It's owned by Kraft, which is now called Mondelez. I saw a video on YouTube, and this Swiss guy was on being interviewed by this American guy, about life in Zurich, and they went into this supermarket, and he said, "I don't eat Toblerone anymore because it's not Swiss." So there you go. Clive, I think we've run past our time. So I'm gonna thank you for coming on, and I'm gonna thank the viewers. And if you're new to the channel, make sure you subscribe if you enjoy these and the videos as well. And Clive, any final words on this first live stream of 2025?
If we missed any of the questions, very sorry about that. But you can write to me on LinkedIn via LinkedIn, and I'll be happy to try and answer. I answer questions on financial stuff. I can't answer questions like "How are you?" or um, uh, "Would you like to buy some gold from Ghana?" That sort of thing. I don't do that.
Oh
But
yeah, I got those too. Yeah.
people who've got valid financial questions, along the lines of "I've just inherited my aunt's house. What shall I do?" Very happy to answer the question.
Great. Thank you, Clive, and thank you, everyone. And I wish you all a great week.
Thank you, Mario. And thank you to all your viewers, listeners.
Thank you, Clive. Let's see here. Okay. All right.